Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, rather, July 28th. Get my days mixed up there. My apologies. We do got a couple items on the agenda here today, so let's start with the economic calendar. The first item here is the Case-Shiller National Home Price Index for the month of May. So as you can see, in April is at 4.6. This is annualized appreciation, and for the month of May, it dipped down to 4.5%. Obviously, we can expect with the coronavirus, not a lot of activities going on, so things were kind of, for the most part, mute at that point. So we'll wait to see once June, July numbers come up, pick up. I'm pretty confident those will, as we've had a lot of activity in the real estate side of things. Home prices rising due to the pent-up demand, and people are moving and such. So I think you'll see a much greater number heading into the summer here. Last but not least, we got the consumer confidence for the month of July. So in June, we had a pretty healthy number of 98.3. However, in July, it was expected to drop to 96, and it dropped even further down to 92.6. This probably a lot of it has to do with the lockdowns again, where we've had a few more states increase their restrictions, and so you're probably seeing a little bit of that going on there. But if you break down the numbers, the economy part, the confidence in the economy, things were picking up on that side of things. So that wasn't what was brought down, bringing these numbers down here. Let's jump ahead to the headline news. Stocks a little mixed this morning. S&P is really the only one that was barely trading above in positive territory. The other two, Dow and Nasdaq, were in negative territory. We do have earnings reports continuing to roll out. Update on the stimulus recovery package. Looks like the Republicans were presenting their plan with the Democrats. Looks like there is, obviously, as one would expect, there is a bit of a gap in between the two. Some two common grounds that they're looking at is the monthly or the weekly unemployment rate. So instead, the Democrats would like to keep it at $600 a week, whereas the Republicans would like to scale that back down to $200 a week, and potentially and make that till end of September, and then October try to revise it so that way it's 70% of the recipients' wages of what they were making before. So they're trying to incentivize people to go back to work. Is the motive behind the lower amount. Also, they both are in agreement to some sort of stimulus check again, but they are trying to determine as to who is eligible and for the amount of what they're going to receive in that regards as well. So there's two factors that there seems like they're in agreement that they like to get some money into people's hands, but as to whose hands they will and how much, that's what's being kind of thrown around in negotiations as well. The FOMC, the Fed, they will begin their two-day meeting today. Tomorrow they'll give their announcement. Not much is expected as we're kind of, where where we are. We've heard a few talks. They've been very accommodative where the economy is and everything. How much they can do is, I don't know. It's really in their control. It's more, the vaccines, determining getting these vaccines out there for people and trying to get the economy back. And that's why they have been very accommodative, trying to create different emergency uh, lines for businesses and everybody else. And we'll have to kind of wait and see what they say. But in any case, they're not expected to have anything that would surprise the markets tomorrow. Let's jump ahead, see how this is playing out in the bond market. Bond market's up 16 basis points. We started a little higher. We had started a little higher couple times over the last few days, but only to lose that. Today, so far, we're kind of hanging in there this morning. We're up at 16 basis points, which will translate, should give us a little better pricing. We have been at the 103 level, but we're just having a hard time staying at this level. But we'll wait and see if we can actually stay in that level or not. Yields are up a little bit than where they were yesterday. Yesterday, we were down to about 58 range. We're testing the 50-day moving average. We're just under 0.6 right now at 0.595. We'll wait and see if we can if this will maintain or not. So as we said, this floor of support has been pretty strong. It had a couple bounce ups. We came worsened yesterday. We came back down and then came back uh, up upwards on the treasuries as well. So that's so the good news is obviously rates are a little bit better today. If you guys are looking to buy or refinance, love to be able to speak to you. Let's talk. I am a loan officer. This video is all my based on uh, my viewpoints. It does not represent anybody else's but my own personal views, where the economy is and stuff. But in any case, I do work with a company, a lender that is a national lender. If you guys are interested in speaking a little bit, please reach out. We can help you get you pre-qualified for your purchase or help you with the finance of the purchase. We can also help you with your refinances. We've encountered many different scenarios and been able to help out a lot of different people. I'll leave my email in the description, so please go ahead and send me an email, and that would be the best way to reach me, and we can hopefully discuss how we can assist you with what you're trying to accomplish. You guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.